Hello, everyone. How are you all doing? Hope you all are doing great. So, the exams, as the AFM students are very much tensed, you'll be anxious now, right? I know you must be worried. Relax, calm down. You have worked so hard, so trust in yourself that you are going to make this through. So, for you, all the AFM students, Advanced Financial Management students, I have created this video. There'll be 5 more coming to this, where I'm going to give you the key areas that you need to focus for each section. So this section is about risk management, as you can see on the screen, section E, which is covering your exchange rate risk management, interest rate risk management using all derivatives, and also how to answer theory parts. Theory parts I'm not going to focus much, but yes, the calculation part, how you have to proceed, how you have to start. So I have taken, as you can see on the left, all this. As you can see, I have taken all the years past paper in this section only, and I have combined just to show you how a similar question comes. So risk management, even though it's risk, it is the risk less, I would say. Safest question for students is to start with risk management. If risk management comes in a section A as a 50 marks question, then it's even better, I would say, because for students who get risk management in section A, that's as a 50-mark question, are more likely to pass the paper, because risk management is a paper. Questions comes in standard format. It is fixed. This question will come in this way only. You just have to know how to use option futures, forward swap, collars, and all those things for both exchange and interest rate risk, and also some bit of theory part. So starting with that, okay, I'm going to write some notes here, which you are going to write with me, and you're going to take it, because these are very valuable notes. I didn't write it before. If it's pre, then what happens is you tend to skip the videos, reading the notes, you know, which is a passive moment. I want you to be actively involved with me. When I'm writing the notes, you write the notes. When you write the notes, you think it. You know how our brain works? When we start writing something, then only when you start, you become more conscious about it. Then you know, okay, these are the areas I need to focus on. So this is how I'm going to teach you. So today, I will. It will not be a very long video, because already I have discussed all these questions. Solutions are there. These are from BP Revision Kit. Even in Kaplan also the questions are same. All these are past papers only, from question 36 to 56. So let's start, and hope that and don't forget to put a like button on this video, because you know how the YouTube algorithm works. The more like and the more people you tell your friends to subscribe to my channel, my videos, my content will be suggested to you. They will come in your recommendation list more. So that's how you get to know. Because I can see from the list that most of my subscribers are not, most of the viewers, the one who watches my video, are non-subscribers. Then they haven't subscribed my channel. 60 to 70% are the ones who are non-subscribers. They're not subscribed to my channel, but they're watching my videos. So I want them to subscribe. The reason is, the moment you subscribe, you get the video real time. Like, as soon as I upload a video, you get the notification, and you have to hit that bell icon. So don't forget to do that right now. Now, starting with it, as I know it's your exam, you need to focus. So I'm going to give this video short and to the point. Okay. So now, starting with it, let's start with the topics. These are the topics which are going to be covered, starting with exchange rate risk management. Okay. So exchange rate risk management, because you know risk management is divided into two parts. One is interest, one is exchange. So my first focus is on exchange. Okay. Here you need to know what? Number one, you need to know forward. Number two, you need to know futures. Number 3, you need to know options. Number 4, you need to know not swap, collars and swap. They come more in interest rate. In exchange rate, no. So these are the options. Oh yes, money market hedge. Money market hedge, multilateral netting, and yes. So these are the 5 areas, key areas, which all AFM students need to focus. You have to know means you have to know 100%. You cannot skip. Forward, future, options, money market hedge, multilateral netting. We are going to cover all this in this video. So stay tuned to this video and don't forget to watch this till the end. Don't skip the video, because if you skip, you might have missed the very important points, right? So don't skip and see this video, see it in full. Since I have taken so much of time to create this video, so I expect that you also pay due respect and attention to this video, because it's only for you, right? You are the one who is going to get the ultimate benefit out of it. So make the most out of this video, and don't forget to share this video with your friends too, because as I always say, sharing is caring. So starting with forward. Okay, when it is forward, how do you handle forward question? How do you handle a question on forward? Exchange rate forward. It's very simple. You just have to choose a rate. Two rates will be given. Sometimes they might give you, let's say, for example, okay, don't worry, the examples are very short. Let's say there are some hedging period. Is hedging is for mm, so hedging is for 3 months. Okay, it could be a payment, it could be a receipt. Okay, payment or receipt. And by the way, one thing very important, know whether it's a payment or a receipt, because the effect is opposite. The rate which you are going to take for payment will be the opposite the rate which you are going to take for a receipt, if it's a foreign payment or a receipt. Okay, start your questions with requirement, because when you read requirement, you know whether it's a payment or a receipt. They tell you it's a borrowing, it's a loan, it's a deposit, it's an investment, something they will tell you in your requirements. So from there you will know it, because based on payment and receipt only you will decide whether it's this thing, whether it is what rate you have to pick, and also which month for futures and options. So coming to forward, they might give you 2 month forward, they might give you 1 month forward, or they might give you 3 month forward. Now they might give you some rate, let's say X, some rate is there. So which one are you going to take? First month, second month, third month? You are going to choose third month, because the hedging period is for 3 months. For forward, that the rate you have to take, and using that rate you divide by your hedging amount. Let's say your hedging amount is 10 million. Okay, so you multiply or divide. Whether you have to multiply or divide, how do you know? You have to see which currency is your this thing and what is the rate. If this is in different rate and this is in different rate, hedging period and the forward rate is different currency, you multiply, same rate you divide. Okay, so the thumb rule, same currency divide. Okay, different currency multiply. Let's say this one is 2, this is in dollar. Okay, and this is dollar 2 per 1 pound, let's say. Okay, dollar 2 per pound. So in this case, you tell me this is your hedging, you are going to hedge 10 million. The forward rate is dollar 2 for 1. So you tell me whether you have to divide or multiply. You have to divide. You have to divide if you want to find in terms of pounds. You have to divide, because this is in dollar, this is also in dollar. You decide this currency, not this one, not the now not the base currency. You see the counter currency. Counter one is the one on the left side, not the one with the denoted as 1. So that you see whether it's the same currency. Here in this case, it will be 10 divided by 2, 5 pounds. Simple. Now I will give another scenario. Okay, I will change it. This is $10 million, but this time this is pound 2 per $1. Pound 2 per $1. What are you going to do? You multiply. Now you multiply to get in terms of what? Pounds, right? $10 into $10, you have to get in pounds. 20 million. Always have to keep the currency in your home currency only. At the end, obviously you'll be given the foreign currency only. That's why that risk is there. You have to convert to a home currency. So forward is that only. Forward has nothing to do. Just pick the rate. One thing is you have to decide. Okay, let's see. Okay, so okay, we'll choose 3 month only. So 3 month forward, this is how it comes. Let's say 3 month forward is 2 or 2.5. Okay, in terms of dollar only. This is dollar per 1 pound, and this is 10 million, which you have to hedge 10 million. Let's say this is a payment, because for payment and receipt is different. Okay, so now you tell me, are you going to choose this rate or this rate, 2 or 2.5? This is a payment. Payment means what? You have to decide what is your foreign currency. This is your, of course they will give you in foreign currency only. So dollar is your foreign currency. That means what? You have to pay in dollar. If you have to pay in dollar, starting from here, pay in dollar means buy dollar. So you will buy dollar in higher rate, because the bank is going to sell you at that rate. Which rate you are going to take? 2.5. 2.5. Higher rate. You have to buy at higher rate. Buy higher rate, sell at lower rate. From your perspective, if you are seeing, but if you are seeing from the bank is normal only. If you are confused in that way, just think from the bank's perspective. Bank is always going to buy at 2 and sell at 2.5. For them it's easy, right? You buy at low price, sell at high, because they want to have a profit. But if you're looking from your perspective, you are buying dollar, you will buy at a higher rate, because you always will be at the worst scenario, worst condition. You cannot make a profit, so you will choose 2.5. So that means you will take, if you have to convert to using forward, it will be 10 divided by 2.5. Simple. Now if it's a receipt, if this 10 million was a receipt, then you would have to divide it by 2, because if it's a receipt, you have to sell dollar to get pounds. Sell dollar means you are selling dollar at a lower rate. So this is the whole concept of forward. In any exchange rate risk question, you understood this, you understood everything in forward. Coming to future. Okay. Future and options are very similar. So please follow my note when I'm saying about future. Okay, I'm sorry, my note is not clear. I will try to make it a little better. Okay. So now coming to future. Future, how do you start future? Future, opening rate they will give you. They start with an opening rate. First, you have to find the basis risk. No, before that, you have to decide which one. You have to decide the month. Let's say your this thing is for 13. March or June. You might have 3, 4 also. Okay, let's, for simplicity purpose, let's take 2. March future, June future. Which one are you going to take? Depends on your hedging. Let's say you have to hedge for 3 months. 3 months means, let's say from 1st of Jan to 1st of March. That means Jan, Feb, 2 months only. You need to hedge for 2 months. Which future are you going to take? You can take March also, you can take June also. But June is more far away, right, from March. You can take March. It is the closest. The nearest to this is March, because futures always expire. We assume it expires at the end of the month. March means 31st March it will expire. So we can take the March future. So you have to write it in sentence, by the way. You are going to buy or sell. How will you decide whether you long or short on future? Or you can say, because another word for long is buy, or short is sell. You buy or sell future, long or short, any term you can use. But how do you decide that? You have to write it in sentence. I'm not going to write in sentence, otherwise then this video will become very big. And then I know most of the people will not watch this video. My ultimate purpose is for you to watch as much as you to watch and get the maximum. I don't want this to be, thinking that okay, something we'll watch later. No. Exam is very near. Not much time is left. So depends again on your payment and a receipt. If it's a foreign payment, okay, payment, please write this because I don't have this notes with me. This is now itself I'm creating this while I'm talking to you. So I have any pre-notes with me. So if you ask me later, I will not be able to give you any notes because I don't have. Just now I'm writing this notes. I have to think. Right now I'm thinking and I'm writing this. So payment and receipt. If it's a foreign payment, you buy. And if it's a receipt, you sell. Simple as that. But you have to see the future, the price also in future. The contract size of the future. Because future has some contract size. So first you have to decide the month, March or June, then long or short or buy or sell. Critical decision in future. Any future you do, even in interest rate also you have to choose. Pick. So the same which I'm telling for exchange applies for interest also. You have to pick one. Okay, so when I go to interest, I'm not going to do this again. Right? Next comes is what? Once you have decided, let's say it's a payment. So you go for long future for March future. Okay, long future for March. Okay. Now coming to what is next? Finding closing future price. Starting point is basis risk. First you have to find basis risk. I'm sure you know how to find basis risk. We'll show you. I will show you in the calculation later. Please check the basis risk. It is the opening future minus the closing minus the spot, current spot. Okay, opening future minus the current spot. And then unexpired basis you take. Once you get that basis risk, okay, then next what you have to find? You will get the closing future price. Okay, this you have to find out. In any future, this is compulsory. You will never get a question where you don't have to find the closing future. Never, never ever. Always they will ask you to find the closing future price if future comes. Whether it is interest, whether it is exchange rate. But this you have to find out. Otherwise, you will not be able to find the gain or a loss in the future. Next, number of contracts. Very important. Even in exchange rate, even in interest rate, number of contracts. How do you find number of contracts? Equal to amount to be hedged divided by the contract size. This contract size can be 1 million, can be 10 million, can be 62,500. They will give you. You don't have to worry. Okay. So when you're coming to the now, we are done with the future. Oh yes, into the tick value or tick size. Next, you have to find a using that closing future price. You have to find the amount to be hedged. You have to convert to your home currency, right? Now future is done. Now come to options. Coming to options, everything same applies. March or June, you have to select which date. Whatever you have to for future, it is similar only. Even the exercise price, they might give you two exercise price. Using both exercise price, you have to calculate. Additional thing here, even here also you have to say another thing. Call or put. Depends on borrowing or payment. If it's a borrowing, it's a put. If it's a investment or a deposit or this thing. It's a call option. Okay. Now, what is the next thing? Premium. How can you forget the premium? You have to calculate the premium. When you calculate the premium, the rate which you convert as you use spot rate. You have to use spot rate to using premium to convert. If this is a payment, then what you have taken the rate. Okay, for this also you have to choose the spot rate. Let's say 2 or 2.5. This is how it will come, right? You have to choose 2 or 2.5. It's a payment. If it's a payment, right, it's a dollar. So you have to see you are going to choose 2 or 2.5. Same way how we have taken for forward. Next. And then of course you have to find gain and loss, and then you have to find the total amount. So that's for options. And coming to multilateral netting. Multilateral netting. 2 times it came, appeared in an exam. I'm going to take you through and see what all we have to take. It's like you are just among themselves, you are netting off among the subsidiaries. And this is one of the easiest question, multilateral netting. You should be able to get full marks for multilateral netting. Another thing which comes is, let me go up and see the list again. Money market hedge. Yes, money market hedges. It comes for exchange rate only, not interest rate. Money market hedge will take you through an example to show how it is. Okay, so now let's start with something. Let's take you through the question. (36). Now we'll see how it is. It is a very similar question. I just want to take you through 36. Okay, starting from here, 36, if you just go through this. Okay, let me zoom it a little. As you can see, multilateral netting is there in this question. You will see owed by, you will see owed to, and then you will have this amount. So what you have to do when you get a multilateral netting is copy paste. Exactly, you have to write owed by, you have to write owed to, exactly write this in your answer, and this amount also. Later you have to convert this amount to one currency only. Using what? They will tell you using what. Sometimes mid rate, sometimes the rates like this. You have to pick this or this. So in this case, let us go to the requirement. Here they have given anything. Okay, so you just have to pick from the spot rate. Spot rate you have to decide and convert into what currency. You have to see at what currency you need to convert. If multilateral netting is undertaken, spot mid rates would be used. Spot mid rates would be used, and this is the base currency in pound. Okay, so if you see the answer later, just see how it has been done. This will go through later. First they have taken the rates. How they have got the spot mid rates? Just simply add the 2 and divide by 2. That's it. Add this and this and divide by 2. Same for all the other 3. And that rate you take and convert and write everything in what? In pounds. Everything needs to be at the end in terms of pounds, because they have clearly told you that pound is the base currency. So everything has to be in pounds. All these things, this needs to be converted in pounds, and write it here. In this paragraph you need to write. Once you have done this, the next step you have to do is make this table. As you can see here, paying subsidiary will be on this axis, horizontal axis. Receiving subsidiary will be on the vertical axis, downwards, and that will be across. So write all the country: UK, US, Canada, Japan. Same order right here: UK, US, Canada, Japan. 4 countries are here, 4 countries are there. Like this, it has to be this. And in pounds, if you're writing in thousands, write the currency up and then write the amount. Which amount you're writing here? The amount after you convert. Here the conversion is not shown, okay, but you can see. Let me show you first one. How do you get first line? Okay, receiving subsidiary. Okay, let us go up. First transaction only I will show you. Next all you can do. Kenduri owed by owed to. That owed by means Kenduri is the paying company. This left side, the first column is the paying company. And owed to, receiving company. Owed to, whenever that word to is there, receiving company. Remember that much? Next you will know. Next, it's easy. It follows. So Kenduri goes to Lakme. Okay. Lakma is what country? US. UK to US. Kenduri is in UK. Amount says Lakma is in US. Right? Here they have told Lakma is based in US. You have to see where it is based. So when you come here, UK is the one who is paying. So UK is paying to US. This amount. And mind you one thing, it's not that every currency you need to change. Sometimes they keep it in terms of pounds, the home country. There you don't have to change. There you keep it as it is. You can copy paste. In this condition, everything needs to be converted. Nothing is in pounds, if you see. Right? So it is Kenduri who is going to this one. So in terms of that will be the rate. Because UK is owing and US is receiving. 28213. But this amount, it is different. This time, the paying company is US. US is the one who is paying to UK. It's going from US to UK. This is how the money is going. Understood? So when you are having this, next step is total receipt, write first, then you write total payment, then you have to write net payment and net receipt. You're getting marks for it. You are writing receipt. How are you writing the receipt? You are adding it downwards. No, add across, I'm sorry. Add across. That means you are adding like this. This and this will give you this. This and this and this will give you this. This and this will give you this. This will give you this. You are adding across. Horizontally you are adding. For receipts. For payment you are adding downwards. You are adding this and this, then you are getting this payment. You are adding this and this one. This and this, you are getting this one. Deduct your payment from receipts and you are getting this. If it's payment is more, keep your net net payment in bracket. So you know that it's a net payment. Next, there is a way to check whether your net payment and receipt is correct or not. You need to check it. How? Add your net payment, add all your payments, add all your receipt, it has to be equal to 0. I'm talking about the net payment. So this plus this need to be equal to 912.3, which is your receipt. All your net payment have to be equal to your net receipt. Because whatever is your payment only you are going to receive, right? Now coming to that, this statement has to be there. Who is paying to whom? How do you decide it? Always the one who is paying, they are the one who has to make the payment to the receipt company. That's why. First line, Kenduri is in net payment, UK. That means UK has to pay whom? US. US is the one who is having the positive figure. That means everyone is paying to US. Everyone is paying to US means everyone is paying to Lakma. Everyone is paying to Lakma. So in first condition, Kenduri will make a payment. This amount. Next, Canada will make a payment. J is Canada. Third, the last one, Japan is making a payment to Lakme, which is 505.4. Write the amount and write who is making payment to whom. All this if you write, and if some theory question is there like this, write it, you will get the maximum marks. All the marks, full marks you will receive. So coming to 37 also, just see in 37. Again, there is a multilateral question, as you can see here. See, owed by and owed to local currency. That's why I haven't copy paste the full question. And here they have given you multiple rates. That means you have to use these rates. You don't have to use mid rate like in the previous one. That's the small difference. But here one rule is there which was not there previously. They didn't tell you the order of the payment in before. You just paid the payment to the receipt company. In this case, they told settlement will be made in dollar. Okay, settlement will be made in the order from the company owing the largest net amount will first settle with the company or the smallest net amount in dollar. I have solved this question. Please go and check if you are not understanding what is the meaning of this, right? So coming to 36 of this. So we have finished the multilateral netting part. Over. Now we are going to go through one more additional thing I have to tell you. When you are dealing with exchange rate risk is first, always go for internal hedging. Always. Before you go for options, futures, forward or money market, external, they are external hedging. You have to start with internal. What are internal? First, you have to net off your payment and receipt if it's in the same currency. Net it off. Only the net payment or net receipt only you are hedging using forward, futures, option and swap. Like how they have done here. This sometimes it is there, sometimes it's not there. Right? So this is the only question which I have got from all the questions which has this internal hedging. Right? You have to use this table. Let's see what's the requirement. So here the requirement is here. They have told calculate using a tabular format transaction matrix. That is your multilateral netting only. Impact of multilateral netting by carrying free submitting cash flows. And briefly explain why some governments allow companies to undertake multilateral netting, why others do not. Please read the theory part of it. And here, exchange rate available to Canary, right? Here, so what are you hedging exactly? Because there are so many currencies. Canary is paying to this. Yes. Advise Canary on recommended and appropriate hedging strategy for the US cash flow it is due to receive or pay in 3 months time from LACME. This itself will tell you. So Canary to LACME, that transactions only up to date. If you see in this table, Canary is paying to LACME here and LACME is paying to Canary here. So it's a payment and a receipt you have to net of 4.5 and 2.1 in US. That's why if you see the answer here 4.5 and 2.1 payment and receipt, and this is a net payment. This is your hedging using next one, right? So in this question 36 you have been given the forward. Let me take you to the question again. You have been given a 3-month forward. This now you have to select. Of course it is US and pounds only because Canary and LACME. Forget about the other two. You have to decide this rate or this rate. Here they didn't give you many forward, only one forward you have to use because you have to hedge using forward. And read the type of the question. Every time this question is only there. Advise the company and recommend. Advise and recommend appropriate hedging strategy. Advise and recommend appropriate hedging strategy. Every time it is repeated. For the payment or a receipt in 3 months. The time also they will give you. And show all relevant calculations. So starting with forward, always you can start in any order. You can even start with option future. It is your choice. But most of the time if you read the examiner's report, they start with forward because it is the easiest, right? So that should be the simplest thing. Always try to do the simple things first because you will be able to carry those marks. You are going to get high marks. Difficult things, if you take more time, you will not get time to do the easy things. You will forget. So they start with forward 3-month forward 1.5996 or this one. This is a payment or a receipt. It's a net payment. We saw it's a payment. So we are going to go for what rate? It is this rate we are going to go for this one. Why? Because of this currency. It is US dollar per 1 pound. That means we cannot deal with dollar. We have to deal in pounds. We have to sell. Sorry, we are going to pay in dollar. That means we need to buy dollar. But to buy dollar, we have to sell pounds because the base currency is pounds. So to sell pounds, you will be selling at a lower rate. This 1.5996. This picking of rate has to be your skill. Number one, you have to know exactly which rate to pick, whether it's option, whether it's future, whether it's forward. This is all I'm trying to show you through all the questions. That this one question is this, okay? Because most of the time, people struggle to get that rate, and then everything else, whatever follows on, becomes wrong. Number one. Okay, if you see the answer also here, they have used this only. 2 million, this one was the net payment, right? Since this is in dollar per pound, I have showed you before, and this is also in dollar, they divide it. You see, they divide. Now coming to money market hedge, the next one, as you can see. You will know, okay, seeing all the information, you will know what are the hedging strategies. Because 3-month forward is there means you have to use forward. Now you can see option is there means you have to have calculate options. Also you are given rates, borrowing rate and lending rate. See, these are some key areas, okay? Some smart techniques, I would say. Rather than reading the whole question, you know that money market is in this question just by looking at this table. Because otherwise there is no purpose of you for them to give you the borrowing rate and the lending rate in an exchange rate question. Right? Whenever this question comes, borrowing and interest rate of the two countries, you have to understand that it's a money market hedge. Okay, but not all. Forget about Canada, forget about Japan. You only have to worry about UK and US. It is there for you, for it's given there so that you become confused. For you to, they want you to be confused. They want to make you confused. They are making it a little harder, trickier. They will not give it easily sometimes, but most of the time they will give you the two relevant countries only, not like in this case. But one country is borrowing, one country is investing. Now which is borrowing, which is investing, right? I have left that for this part only because I want to show you through the example. Money market hedge. This is money market hedge, right? Not I think this, and another question came on money market hedging. Not much. Money market hedging does not come very frequently. It is always forward future option in exchange rate, but better to know money market. Like this, you never know when it comes. So money market, if you see, you need to invest, you need to convert, you need to borrow. First you need to see, right? You are going to, what are you going to do? You need to buy. What do you have to do? Money market hedging has steps. Once you know the steps, you know money market hedging. You need to know whether it's a borrowing, you have to invest or not. So this is a payment. Okay, here if you see, you have to start with invest. What country to invest, what currency to borrow. If you see, invest in US and borrow in pounds. This is a foreign payment. For foreign payment, always invest in foreign currency. That is UN US. It's a thumb rule. Foreign payment, invest foreign. Borrow domestic. If it is for foreign payment, then for foreign receipt, you tell me what is it. It's the opposite. Foreign receipt, you invest in domestic, borrow in foreign. Okay, but since there's a foreign payment, you invest in foreign currency, you borrow in domestic. Invest in foreign means invest in US and borrow in pounds. But before you from invest to borrow, you have to convert. In between, one step is there that you have to convert. So you have to invest first. How much net payment is there? 2.4 million. That you need to invest at what rate? Now you know that you're investing in US means US rate. This rate. US investing rate you have to take 3.1%. That means for borrowing this one. But you cannot take 3.1% as it is. You need to take it in terms of months. Time apportion it because it is annual. Interest rates are always given annually only to you. You have to find it. This is for hedging for 3 months. That means you have to take 3.1% into 3/12. Always. For any money market hedging, this is the technique. Right? Next we'll see that once you get the amount, then using that amount you have to convert using the current spot. You have to convert. What is the spot? You have to again go to spot and decide. It is this spot only, this one, payment, right? US payment means you have to sell pounds to buy dollar. So sell pounds at a lower rate, right? Then you have to borrow again. This amount again will come here and you need to borrow at the interest, the borrowing rate. That's why it is divided by 4 here. That means into 3 over 12 is the same as into 1 over 4. They didn't show that 1, but they just divided by 4. And finally, the amount in pounds. Here also, it's in pounds. It has to be in the same currency under all the heading for you to compare at the end. Now you can see option is there. Option also you have to decide. Option, they are going to buy put options because it's a pound. I told you it's a borrowing put, deposit call. And they have given you the 2 exercise price. Under both exercise price, you need to do the same method. Only the numbers will be different. For any option, this is fixed. Let's go to the option. Contract size is given. Premium you have to calculate. 3-month or 6-month expiry, 3-month expiry, and for put option. Circle it. Even in your exam paper, better you circle it and keep. Which one? 1.6, 1.62. They didn't tell you which exercise price, use both. That means 2 premium you have to calculate. Right? So remember that it's in part A. That means all the 3 comes in part A. Before you calculate your tabular format and all, comes in part A. Right? So let's go to options. See, option, just take the exercise price and divide it because it is in dollar. Go and check and see the exercise price. Yes, exercise price quotations are like this, US per 1 pound. That means 1.6 per 1 pound. So you have to divide it and find in pounds. So these are the steps. Through this, I'm showing you the steps. So please try to make a note of it, make a note. Starting is your payment in pounds. You have to convert. Next, again, you have to divide this by the contract size to get the number of contracts. Exactly 24 contracts. When you're getting exact, it's better. No under, no over hedging. But when it's in decimal, then there's an over and under hedging. Okay, next you have to calculate the premium. First, calculating premium in dollar, then in pounds. Obviously, because you are given the dollar amount, right? So 24 contracts into this. What is that? It is this 2.08, but it will be divided by 100. Always don't forget to divide your premium by 100 because it is premium cents per pound. Cents means in 100 cents means $1. So 2.08 cents will be has to be divided by 100. Sorry, it's the other way around. So 2.08 cents means if you want to find in terms of dollar, you have to divide it by 100. That's why 0.0208 and into contract size. So number of contract into contract size into premium will give you the total premium. This is in dollar, you need to convert in pounds, but you have to use your spot rate 1.5938. It is this one. Premium always, irrespective whether you exercise or not, always spot rate. Once you convert, you get the amount and the total payments. You add your payment since it's a payment. If it's not, if it's a receipt, you have to deduct your premium from it. But since this is a payment and this payment and premium is also a payment, you add your premium and the payment. Okay, this pound and make sure both are in pounds, same currency. It cannot be that premium is in one currency and the payment is in another currency. And finally is in pounds. Same steps follow for 1.62 also. Okay, and the only difference, if you see, this is in 23.7. That means what you are using, how many you are using, less, 23 contracts only. You have to round down. You cannot use 23.7 contract, never. So now using this 23, you have to see what is the premium and not. One step is there. Now you have to find under unhedged amount. Of course, the amount is not fully hedged because you're using less than 23.7. That means amount is not fully hedged using options. So that small amount which is not hedged, that will be hedged using what? Always forward. Okay. That unhedged amount also you have to find out when it's a fraction, decimal place. Otherwise, you don't. How are you going to find out the amount? Simply Okay, this amount, contract size into this amount, the pound payment into, multiply again by the exercise price to find in terms of dollar, because this is in dollar, the total payment. First you have to find in dollar only, then only you have to convert to pounds using what? The forward rate. Same forward rate what you have used previously for forward, because it's a payment only. So now you total, this is your amount using exercise price options you are going to hedge. This is your premium and this is your forward which you are going to hedge using forward. Add all three, that's in pounds. That's not it. Now you have to explain. You have to give conclusion, which is the best. If you see in conclusion times, they never give a specific answer. They tell, so how do you go to conclusion? Simple, give advantages, disadvantages of forward, future. Future is not here, sorry. Forward, option and money market hedge, and see which one is the best, which one is giving you the lowest payment. Obviously, you will choose the one which is giving you the lowest payment, right? So conclusions and all. Compare and write your conclusions. One more thing in this question which I want to take you through is this. So now you know money market, now you know options, now you know forward. In exchange rate, I'm not going to do any more questions on this. You shall be able to do. If there is anything different, I will try to show you that part only. Now coming to part C, this is a theory question. I'm not going to cover it. I just want to show you what are the ways a theory question can come on this question, which is they're asking about long call option and high gamma value. So know what is a high gamma and a long call option means, and you have to relate this too. So coming to question 37. 37 is a question on interest rate risk management. Right? So I'm going to cover a question interest rate risk management. Yes. As you can go and try to zoom it out, right? You can see from here. So these are your multilateral netting and all, which I'm not going to cover here, right? If you see in interest rate, one thing is common. You have been given future. You have been given future. To highlight the reason I'm not able to. Okay, guys, I think something is not working right with this part. So this will be covered in the next part of this, part 2. Thank you for watching and see you in my next video. So part 2 of this is coming as well. So don't forget, again, I'm telling you, don't forget to subscribe to my channel and share this content with your friends. Thank you so much.